everybody. Welcome to today's episode of the Daily Dose. Today is Friday, November 18th. If you like this type of content, please follow wherever you listen to podcasts. Subscribe on YouTube. It would mean a lot and help us grow the channel. So, stocks ended slightly green today, despite closing negative on the week. The S&P 500 was up almost 0.5%. The Nasdaq was pretty much flat, but a little bit green, and the Dow Jones was up 0.6%. U.S. stocks moved back and forth Friday as investors neared the end of a turbulent trading week marked by mixed retail earnings and a chorus of hawkish Fed speak. An assembly of Fed officials on Thursday pushed back against speculation that a pause on monetary tightening is close. The remarks made in separate speaking engagements across the country sent stocks and bonds into disarray after a fleeting uptrend propelled by lighter inflation data, and I guess you could say that was also propelled by speculation on what the Fed was going to do. Inflation has only recently shown signs of moderation, with consumer and producer price data still stubbornly high despite retreating in October. Meanwhile, U.S. retail sales rose at the fastest clip in 8 months over the same period, prompting policymakers to hammer down on strict messaging about the work still needed to be done to tamp out elevated costs. Minneapolis Federal Reserve Bank President Neil Kashkari said in a Minnesota Chamber of Commerce event webcast that the extent policymakers expect to raise their key federal funds rate remains an open question. His comments came after St. Louis Fed President James Bullard and San Francisco Fed President Mary Daly each said that the central bank is looking at a terminal rate of up to 5.25%. Fed Chair Powell recalibrated monetary policy at the November FOMC meeting by adopting a new speed versus destination paradigm, indicating an intention to reach a higher terminal Fed funds rate while doing so at a slower pace. EY Parthenon chief economist Gregory Dago said in a note, "The difficulty for the Fed will be to prevent an excessive and counterproductive loosening of financial conditions in the face of weaker than expected inflation." Goldman Sachs Group on Thursday also lifted its forecast for the Federal Reserve's terminal rate to a range of 5 to 5.25%, tacking another 25 basis point hike in May after increases of that size in February and March, and half a percentage point in December. And I'm still thinking that we might see 75 basis points in December, which would really rock this market, I think. That would indicate that the federal funds rate would then be even a little bit higher. And I wouldn't be surprised if we see that. Inflation is likely to remain uncomfortably high for a while, and this could put pressure on the FOMC to deliver a longer string of small hikes next year, economists led by Jan Hatzus has also said. In the shadow of renewed rate jitters, Gap, Ross Stores, and Williams-Sonoma rounded out a busy week of retail earnings, and it goes on to talk about them, which I'm not too interested in. So, I mean, basically, people are starting to kind of think about and price in the fact that we might have a higher terminal federal funds rate. I mean, I still think it could go even a little bit higher. I don't think they need to. I think inflation is going to start coming down drastically. I saw a really interesting chart today regarding supply chains and pretty much saying that there's no delays anymore in these supply chains throughout the end of the year. And that should be one indicator of inflation actually dropping drastically. There are people, the likes of Cathie Wood, saying that they expect deflation to be a bigger problem than inflation in the coming year, and that the Fed is still being too aggressive. I guess we'll have to see. But what the Fed is doing in at the end of the day is going to directly affect this market. And so if we take a look at the chart here on the S&P 500, you'll see we kind of came to the very top of this zone we have and came off. We're kind of just starting to coil in this range now. Nothing really too exciting on the S&P 500. I think there's kind of these two sides, people that are thinking that inflation has peaked and that the Fed's we've also reached the peak of the Fed's hawkish rate hiking cycle, and so that would justify higher prices on the stock market. But in reality, we're still seeing high inflation at this point, and we're seeing an extremely hawkish Fed, a Fed that has not let up a single bit, and we might be looking at higher than expected terminal federal funds rate. So, yeah, I'm still looking to see this come back down. I don't really foresee us breaking through the 200-day moving average at this point. So I am looking to come back down maybe somewhere to this range, back near the 3,700 to the 3,600, somewhere in here maybe, and then maybe put some pressure back on this low zone here. And I still think it's possible that this market could get back to the 3,250, especially if we see another 75 basis point rate hike in December, which I think is more likely than what people think. So if we take a look at Bitcoin, it's been relatively flat too since breaking through this zone. I've talked about some of the reasons why I think it hasn't gone directly to our price target yet, even though it's broken through the bottom end of this range. And those two reasons being that the stock market had rallied, and this market has been extremely correlated with the stock market this year, as far as up days, down days, just general direction of the asset. And then again, what happened with FTX, I think, really shook a lot of people's confidence in the crypto space. But I think the investors that were already in the crypto space were then moving assets out of riskier coins into Bitcoin. And I think there could have been a lot of money flowing in that maybe held the price up a little bit. But, I do still expect us to hit our price target of about 12,000. I at least expect to see that. And I think that'll be a good level for long-term investors to start thinking about coming back in and building up their positions and adding to their positions. And that's what I'm looking at on Bitcoin. So, I'll leave it there. Not a super long episode. We'll have an episode this weekend that goes a little more in depth about things going on in the market. I'll talk about the FTX situation. I'll talk about Elon Musk and Twitter. I'll talk about the Fed. I'll talk about inflation, deflation, all that. I'll talk about some more stuff too. So be sure to stay tuned for that this weekend. I appreciate everybody for listening to the Daily Dose episodes this week. I hope everyone had a great week, and I will see everybody this weekend. Thank you.